This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hello everyone, and very much welcome to Breaking Banks Europe. Today we're going to dive into the world of crypto, DeFi, and a lot more, because I'm sitting here with a very distinguished guest, Charles Hoskinson. Charles, very much welcome to the show.
Thank you for having me on.
Yeah, great that you could join here at MoneyPod at Money2020 in Europe, here in Amsterdam. It's an amazing time to be here in Amsterdam because the weather is actually beautiful. Mm-hmm. I hope you enjoyed some time here as well.
I haven't been run over by a bicycle yet, so I think I'm having a good time.
That's a good start, yeah. It's pretty dangerous out there.
Oh, yeah, it is.
But fortunately, it's safe out here, and I'm really glad to have been able to have a conversation with you here. We have about half an hour to get to know each other a bit better and hopefully enlighten our audience a bit about what you're up to these days. Mm-hmm. But maybe before we dive into what's current, let's dive a little bit into the history. So for people who don't know you that well, how should they know you?
So I originally started trying to become a mathematician, although I liked money more than I liked mathematics. And so I dropped out and I became an entrepreneur. And right around when I became an entrepreneur, the cryptocurrency industry was just getting started. So I entered the Bitcoin space very, very early. It was around 2010, 2011. Mm-hmm. I came in with the slash dot revolution. Back then, no one cared because Bitcoin was under $1 and everybody thought we were insane and
Different
all
times.
going to prison.
Yeah.
So I asked a professor of mine, I said, how should I get started in this industry? He said, well, those who cannot do teach. So why don't you start an education project? And that's the way to get to meet everybody. So I started the Bitcoin Education Project, and I ended up teaching people, and I gave away a lot of free content. I ended up having over 70,000 students. And it was a great opportunity to kind of aggregate and get to know all of the OGs inside the space. And one of those students was a Chinese investor named Li Xiaolao. And Li said, hey, I really like your course. I want to give you some money to invest in you. I said, I have no business skills. I have no business strategy or ideas. He's like, no, you'll figure it out. It'll be great. So I created the first algorithmic stablecoin, probably the first stablecoin, to be honest, in the cryptocurrency space. And DEX, it was called BitShares. Yep. And the project was moderately successful back in 2013, and then it kind of leapfrogged into Ethereum along with others, and that's what I'm mostly known for. And then after Ethereum, I created a company called Input Output. We've been in business for now 10 years, and we have 168 scientists we work with. We've written 240 papers, labs from Stanford to University of Wyoming.
Wow.
And then we also have a large engineering division, and we build cryptocurrencies and DeFi protocols. And so what's nice is we kind of get to do a little bit of everything from stable coins to yield products to full layer ones.
Cool. Sounds amazing. And I think so like Input Output, is that the familiar name that everybody is familiar with? Because a lot of people also know you from Cardano, right?
Yep. And we're the ones who created Cardano. So Input Output was originally created specifically to build Cardano, but when you build a full stack cryptocurrency, you end up getting good at a lot of different things like digital identity and compliance and governance and setting up foundations and all these other things. And so we kind of grew into like an engineering company, a research company, and a venture studio. And so now we have a very large portfolio of things that we work on, invest in, and a huge network of partners. Just on the Midnight side, which is one of our products, we have 108 partners that we brought in. So it's really fun that we get to do all this broad spectrum of work.
No, exactly. And I think it brings you also to all kinds of business and all kinds of different projects. But maybe just a bit to understand as well, because I think the world of crypto and DeFi is today quite different than it was 10 years ago. So how do you see this evolution? Because I think nowadays people are beginning to see it as more mainstream, but it's come from the fringes of the financial system rather than from inside, right?
Well, money wants to be free. People want liquidity. People want innovation. And what's happened is we got into this great ossified regulatory structure for a long time. And what it ended up doing was it was the worst of all worlds. It killed all innovation. It created hyper-centralization. So these too big to fails got bigger. Yep. And it didn't really help anybody from a macro and micro-prudential sense. And then compliance got horrendously expensive. It's $500 billion a year when you look at the global compliance costs. That's like a Tokyo every 3 years that you have to spend for it. So everybody in the finance world were like, we need to innovate and we need to get rid of this regulation. We need to move to global markets that are truly global and operate 24/7, not these fragmented Westphalian markets. So crypto came right around the back of the 2008 financial crisis when it became clear that we weren't going to change the system unless we innovated our way out of it.
Yep.
And then what ended up happening is it just grew so large that people are starting to acknowledge that there's a there. And right now what we're trying to figure out as an industry is how to get rid of TradFi and DeFi and just make it Fi.
Yeah.
So it's very much like the media. When the internet came out, newspapers resisted it and legacy media resisted it. But the smart ones said, hey, actually, there's a way to build better business models in this new world. And it stopped being new media and legacy media. It just became media. Mm-hmm. And so finance is going through that push. And that's why you see almost every TradFi firm, whether it be Visa or MasterCard or BlackRock or what have you, they're now in the cryptocurrency and blockchain space in some way.
Yeah.
The other big challenge with the United States government was during the Biden administration exceedingly hostile to the cryptocurrency space. But the Trump administration is the polar opposite. Not only are they friendly, the president's issuing his own financial assets. So when you
we could argue whether that's a good idea, but
but whether it's good or bad, it's a signal to people that U.S. policy for the next 4 years will be very open, and so it's a land grab. And a lot of people that were reluctant and reticent to come in, they're going to come in because they also hate working with the banks.
But do you see this also as a good political move to actually bet on crypto developments as a U.S. Government?
Yeah, absolutely. Because it innovates a lot of different things. So let's say you're Microsoft, as an example. You have billions of customers, and you sell your products in well more than 100 countries. And so you sell all this software in Sri Lanka. And then you have to deal with the Forex there, and you have to get the money in and money out. And after it's all done, you probably lose 20 to 30% of each transaction. Well, if you have a stable coin that's US backed, you have no Forex risk, you're in charge of that, you have a direct financial relationship with the customer, and your fees are probably less than 1% for that transaction.
I think it's the ultimate disintermediation.
Yeah, exactly right.
Yeah.
And so with the Magnificent Seven, they've been wanting to enter crypto for a while. Facebook tried, and they kind of got pushed out because the regulations weren't quite there. But with things like the Genius Act and the upcoming market structure bill and normalization with MiCA here in Europe, there's definitely a path where you're going to see tech companies start behaving like finance companies. And frankly speaking, they're better suited to do finance than the finance companies because everything's protocols these days and interfaces.
I definitely see some cases there. But one of the challenges I see, or actually some of the challenges is, so on one end, of course, when you do disintermediation, there's always a lot of losers. Right? Because there's parties in the value chain that are going to lose out. So that's where the resistance comes from.
Well, yeah, middlemen, there's two types of middlemen of necessity and middlemen of value. So when you bring lawyers into a transaction or something like that, you're doing that to enhance or augment the transaction to improve your safety inside of it. So you want them there. Middlemen of necessity, you don't want them there, but you're forced to accept them, and they kind of are like vampires sucking value out of the transaction. And when you look at all of our global supply chains or healthcare or pretty much any industry, there's a lot of these middlemen that really serve no purpose, and they don't benefit consumer protection. In many cases, they increase fraud or data issues. And getting rid of them is always a net positive for the economy as a whole. Every time we've done it, it's been good for the economy.
No, but I can definitely agree with you there. At the same time, it's also a challenge because they are very often also the link to sort of decentralized governments or powers that at some point want to be somewhere in the chain rather than being circumvented.
Yeah. It also just depends on what your policy outcomes are. The thing is, I want to live in a world of automated compliance. I mean, it's just absurd what we do with KYC and AML. And it's so much money. And it's also, how did we get into a situation where the bank has to do the job of the regulator and file SARs and these types of things? It's so bizarre that we allowed this to happen as an industry. And so when you look at crypto, you have proofs on the wire and settlement is compliance. And so that alone is a justification to embrace the system. But then the other thing is micro-securitization is extremely interesting. When you look at structured products, if you're Goldman Sachs, you can't penetrate the developing world. There's all these things that have great yields, whether it be microfinance products or small cap IPOs for companies that have great balance sheets. But you're not going to go enter Kenya for a $35 million opportunity or $50 million opportunity. Yep. But if you can tokenize those types of things and chop them up and securitize them and put a structured financial product and the bundle, sell that on the global market, then suddenly small firms can aggregate to medium firms, can aggregate to large firms, and you create liquidity for billions of people who don't have that liquidity. So that's really the promise of it.
I'm also into microfinance, and I definitely trust you there. And I think it's indeed, we should definitely pick up on that opportunity to create this more liquidity, because currently money is very often stacked up in two higher piles that are not moving anywhere.
Right. And the other problem is impact investing is creating, like the worst job in the world is to be the money manager for the Sovereign Wealth Fund of Norway. They say, okay, you can't really invest in anything that we disagree with, but you also have $1.7 trillion and you have to get like a 9% yield per year. It's like, where do you want me to put the capital, man?
Exactly.
There's just too much money in the world. So crypto's an asset here to stay. And I think Bitcoin and Bitcoin DeFi is probably going to be the gateway drug. Now that the U.S. government's going to create a reserve, they have 212,000 Bitcoin that they're currently holding. Fortune 500 companies will come in and other nation states will, and then they'll say, hey, we don't want to just sit on a deflationary asset. We'd like to find a way to lend it and create yield with it and these types of things. And that kind of then invites structured financial products from the mid to large guys like the BlackRocks of the world and Goldmans of the world.
That makes a lot of sense.
And then it percolates down and then you get all these exotic firms that come in.
And so how do you see, one of the big challenges I see as well is sort of the governance issue, right? So I think we still don't have a really proper global governance for a lot of things. Well, actually, you would want this to work on a global level and not just be dependent on one country's legislation.
Right.
How do you see this evolve for the crypto space?
Well, I mean, it's kind of funny because in software, we're really good at governance. Look at the Linux Foundation and Linux kernel, and this is something that North Korea and Russia and Iran and Israel and the United States and China all have some connection to, despite the fact that geopolitically they all hate each other and they can't get along. And it's the same for protocols. When you look at HTML or CSS or TCP/IP, the backbone of the internet, or Wi-Fi, everybody can use these types of things. And so there's a magic in internet scale governance and protocol scale governance that seems to elude the world and the geopolitics of the day. So I'd actually, if I'm building a global financial system, much rather be building on the back of neutral protocols that kind of respect the rights of everybody than kind of bet on one geopolitical regime. Because then you end up in these situations where you just, like, imagine how frustrating it is to be Abu Dhabi. They have all this money, and then the Russians come and they kind of like them, and then the U.S. shows up and says, "Oh, you can't do business with them anymore." And they're like, "Well, maybe not." And then China shows up and says, "We don't like the U.S." And they just want to be a neutral place for people to trade. They don't want to take geopolitical sides, and there's way too much money to pick winners and losers. The same for Switzerland, and they were forced to pick winners and losers. They lost $65 billion because of the Ukraine invasion.
It's tough, that you always have to pick a side.
And so with blockchain, you really don't. It's a global system, and it's there. And what you do is you say, okay, we're going to regulate instead at the protocol level. We're going to look at the wallet transaction level. And when you go to try to convert that into the local fiat currency, that's the point of KYC and AML, and that's where you start applying some sort of regime over it. It's probably a more tenable system. And you're starting to see this in places like Argentina. I was just down there. We opened our office there, and Milei, he's completely transformed that economy. It's a $700 billion GDP, and $100 billion is in cryptocurrencies. So if you look at the next 5 to 10 years, there's a very real chance that they'll just abolish the central bank and they'll be completely dollarized with dollar-backed stablecoins as a private currency there.
It could in any case be a very interesting experiment to see what happens. Could you foresee what happens when you actually do that? Because I think one of the challenges we face is, of course, that we need central banks because we have to cover up for overspending of governments to a certain extent.
Yeah.
That's something that might go bust if we actually switch to a fixed number of currencies, right?
Yeah, it just forces governments to be a bit more honest about their fiscal policy and monetary policy. My father worked as a physician for almost 4 decades, and he spent all that time being very frugal. I remember I grew up with that frugalness, and he saved and saved and saved. And since he retired the last 10 years, his savings have lost half their value because of inflation. So it really is just a disgusting thing when these nation states go and spend and print, and they tell everybody, well, that's the only way to do things when you have more sound monies or deflationary monies which appreciate over time. And you can build all kinds of financial systems from them. But as we've learned with the European Union, Euro, or any of these things, you don't necessarily need a central bank in your country to have a functioning money system. And if you just give people the freedom of choice, what will end up happening over time is we'll start migrating towards more sound money and safer systems. Then you're absolutely right. Then the government has to learn how to live within its means, and it probably should. Yep. And there should be a social conversation about what the tax rates need to be and how do you get to a balanced budget. I remember when I first went to college, the U.S. national debt was $4.5 trillion. Now we're well over 30, on our way to 50. And no matter who we elect, Republican or Democrat, it increases 5 or 10 trillion every single term.
That's bizarre.
And it's going to collapse. You can't have $50 trillion debt with 5% interest rates. That means we spend more on interest than we spend on the entire U.S. military and education combined.
That's bizarre.
It's not a sustainable system.
No, I think it's now finally also that financial markets are telling the administration in the US as well that they don't believe it's going to be repaid anymore.
Yeah, I think we got downgraded for the first time ever. You know? And so it's coming, you know, and we've always been immune to it in America because, you know, we were the world standard, but everybody wants to move to something else. And cryptocurrencies are kind of the great reset. And in the last 15 years of the industry I've been in, I've watched it go from under $1 billion to $3 trillion industry. And there's almost nobody to 550 million people in the cryptocurrency space. So at that growth rate, you know, I fully anticipate before the end of the decade that crypto as a whole will be a $10 trillion asset before 2030, and we're probably going to have over 1 billion users before 2030. When you get to gold scale and you're starting to do all these monetary experiments real time, you're experimenting with everything. You're experimenting with UBI, you're experimenting with inflationary monies, deflationary monies, you're developing all kinds of exotic and new yield products or stable products. And instead of doing those over a multi-decade monetary experiment with a couple of central banks, you're doing with tens of thousands of blockchains real time with hundreds of millions of users. So from an economics viewpoint and a simulation viewpoint, the amount of knowledge that we're gaining in monetary policy in just the last 10 years is probably better than the knowledge we've gained in the last century.
Exactly, but one of the challenges is, are the regulators keeping up, right? So I think at one point you'll see, especially if you look into sort of the stability mechanisms, but also money laundering, KYC, which is also increasingly sort of coming into the crypto space. I think these experiments, are really valuable because it's innovation at high speed. But how are we going to keep up and learn fast enough?
Yeah, and that we have a product coming out, and there's other people that are chasing it. So I always look at cryptocurrencies in terms of generations. And so Bitcoin was the first generation. Ethereum brought smart contracts. It's kind of like when JavaScript came to the web browser. So you have programmability. That was the second generation. Cardano was the third generation. So you started worrying about scalability, interoperability, and governance. And the fourth generation is really solving these regulatory problems because you can't just have public transparent ledgers. You have to have a private side as well because you have GDPR, you have BSA, you have HIPAA, you have all these privacy requirements. And securities do require a private side and a public side because broker-dealer requirements and disclosure regimes and other such things. So you need to have private properties that are decentralized, meaning that they're not facilitated by a trusted third party, but rather they're actually done by the blockchain infrastructure itself, which is an amazingly difficult technological problem. But once you solve it, and this is what things like Midnight do, if you combine it with an identity system, then you can have selective disclosure. So basically, then you start talking around instead of, okay, it's universally private to everybody, you say, what's the disclosure regime for this asset type? So, you know, you'll see it, and I'll see it, and the auditor sees it, and the tax man sees it, and the regulator sees it, but it's private otherwise, you know, to the entire general public. And then you can start talking about constructing automated regulation from that. And what's nice is you'll have these small jurisdictions like Abu Dhabi and Dubai where they have ADGM and VARA there, or you know, like the FCA in the UK with their sandbox regime, or a FINMA in Switzerland, or the Singapore Monetary Authority, where they're agile enough and have a close enough relationship where they're willing to let people start taking traditional financial products and put them in this type of paradigm. And then they operate with a much higher level of efficiency, and they operate with a lot more velocity and liquidity than a conventional financial product. So they have a huge competitive advantage on yield and other aspects. And as an investor, you're like, well, I like that. And so more and more people work their way to it. And what's really cool is the United States government is starting to operate like a startup. You know, we went from everything's horrible and ossified, there's no progress whatsoever, to a very strong possibility we're going to pass maybe 2 to 3 cryptocurrency laws, dedicated cryptocurrency laws this year alone, which is remarkable. A market structure bill and a stablecoin bill, potentially updating also our securities regulation. So there is a window.
Do you see them all as a positive development? So do you see that generally the content of these bills is looking good as far as you know?
Well, we worked on, especially in the Senate, the Genius Act, and it's not a perfect bill because the challenge is that these stablecoins are really a special case of real-world assets in general. And you really should solve the general case and not build legislation for each special case. Because, you know, Coinbase, for example, wanted to have yield-bearing stablecoins, and a lot of other people said, well, what about tokenized real estate, or, you know, these types of things? Or intellectual property was another really big one. He said, no, we're just going to do stablecoins. And I think it's a good step forward. You know, there's nothing wrong with the legislation the way it's written. There's $243 billion in stablecoins in circulation, and about $120 million worth of 120 million transactions, excuse me.
Because a lot of the
month.
crypto ecosystem depends on these stablecoins too,
Yeah,
right?
it's 71% of all the economic activity on Ethereum. So it's a massive thing, and it's only a handful of issuers. And so there's existential risk if those issuers are not brought under an appropriate compliance regime and audit regime. And while they trade on cryptocurrencies, they're not cryptocurrencies because the nexus of trust comes from a central issuer. You don't trust anybody with Bitcoin or Cardano or Ethereum. It's like if Vitalik dies in a plane crash or I get killed or something, these protocols still exist and they still run. Whereas if Circle went out of business, it's like USDC doesn't really have a lot of value. And so you have to have a regulatory regime that understands and reflects that. And also just an awareness of history. In the 19th century, during the baronial age, the United States had 200 plus private monies in the frontier, and all of them went out of business within 30 years because there's too much temptation to go fractional reserve and overprint.
Exactly. And so how do you see the legislation in Europe comparing to sort of the plans that are in the US at the moment?
Well, the European Union was ahead of the United States. They have an interlocking framework called MiCA, and it has all the problems you would expect with Europe, where the European Union has a high-level understanding, but then there's all these particular things you have to deal with for the host country, whether it be France or Germany or Italy. And what will end up happening is MiCA will get refined based upon what happens with the United States. It's very similar. Remember when Sarbanes-Oxley came out, and then everybody said, we're all SOX compliant now. They had to figure that out. So it'll be the same situation in Europe, and they'll kind of carve out certain things. But it's not a bad framework. It's not a good framework. There's a lot of annoying things, especially how staking is treated and other such things. But at least there's a negotiation, and at least there's some clarity.
We're getting
on
somewhere.
penalty, and we're moving in the right way.
Yeah.
I'd say the Middle East right now is the furthest ahead of all people because they have these sandboxes which can move literally at the speed of weeks, for new things.
And so which cases do you see? I think stablecoins are very popular these days. I think a lot of parties are working on issuing new stablecoins, like also Euro stablecoins, which are a bit underrepresented still. So, but what else? What are the next cases you'll see? I think we're about to wrap up almost, but sort of what are the next things that you're working on that are worthwhile sharing?
Well, real-world assets are a $10 trillion business, and there's all kinds of structured financial products that can be generated, especially when you take illiquid things in the emerging world or in places where it's really hard to do an IPO or access traditional financial markets, and you bring them into the market because they just have higher yield. Like we did over 50,000 loans in Uganda and Kenya, and I deployed $5 million for us. It was very small loans, and we got on average an 18% return with a 2% default rate. So that's great for microfinance, and so securitizing and structuring those things and allowing those loan books to expand, those are the things that are near and dear to my heart. But then also a lot of exotic innovations where there's like new types of financial products that are extremely easy to create, and they would never be created by a large financial institution because the liquidity and depth is just simply too small. Like imagine Death Row Records with Snoop Dogg. It's like nobody's going to go and securitize his intellectual property or these types of things. It's a very exotic deal, but it's like self-serve finance, and so you can do these types of things. So if you open it up just a little bit, the aggregate of that will be first in the billions to tens of billions and eventually the hundreds of billions of dollars per annum for these things. And then there's some really cool exotic next generation things like royalty management with AI is a big one. I think blockchain is the only technology to do that because you have all this data that you train these large language models on, and it's very clear that people want to train it on intellectual property that's not open source but rather closed source. So how do you pay the people that provided that data? So there's going to be an ad tech revolution and an AI compensation revolution. So I think there's a lot of cool things we can do in the intellectual property space. But overall, it's a very vibrant industry. It's growing by leaps and bounds. As I mentioned, we'll probably be over 1 billion people by the end of the decade, and there's no indication of anything slowing down. There's a lot of investment in flows.
Yeah, no, I can definitely see that. So it's really cool. And we actually have to wrap up already at this space. Maybe one thing. You're also doing a lot outside of the finance world. Any projects you'd like to mention for people to keep track of on you?
Well, it's kind of funny because I spend half my days doing finance and the other half non-finance. I'm a bison rancher up in Wyoming. I got 800 buffalo and they haven't killed me yet, so I must be doing something right. And I do a lot of synthetic biology these days, especially with plants. I'm also invest in the team that brought back the dire wolf and is bringing back the woolly mammoth. And I own an anti-aging regenerative medicine clinic up in Gillette, Wyoming. We have about 13,000 patients, and we do a lot of stem cell research. So it's kind of fun because that diversity, it creates, a syntopical understanding of the power of finance. Because in every one of these places, you always think of ways, well, how can we be more creative with money and financing? And, how can we find different governance and ownership structures. And it's amazing how, regardless of the industry, these skills are so universal.
I tend to say that as well. I mean, it's a really powerful enabler, but it's not a product by itself. Nobody wants financial products. People just have a different outcome in mind, that they need a financial product to get there.
Right.
Yeah. Well, it's been really great talking to you, Charles. I really enjoyed the conversation, so I'm really looking forward to keep track on your next developments, both in finance and outside.
Thank you so much.
And for everyone who's listening, thank you for joining. This was Breaking Banks Europe, our show at Money2020 in Europe in the Money Pot. See you next time.
Cheers.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.